Markets and of developments in the Zimbabwean economy. A beautiful evening it is to you. Thank you for joining us live as a broadcast from our Hampton studios in Harare. I'm Ibn Mabunda. Let's get on to business. Our news tonight. Today, the World Bank released its 2019 Africa Pulse report. In a live media briefing, the World Bank chief economist for Africa, Mr. Albert Zufak, revised sub-Saharan Africa growth to 2.3% in 2018 from 2.5% in 2017. Economic growth remains below population growth for the fourth consecutive year. However, growth is expected to rebound in 2019 to 2.8%. He also stressed the importance of the ratification of the African Continental Free Trade Area in contributing to regional growth. Notwithstanding, last week Gambia became the 22nd country to sign in favor of the African Continental Free Trade Area. Mr. Albert Zufak presented on the subject. Let's have a look.
The African Continental Free Trade Agreement is clearly one potential solution to reducing trade volatility and ensuring higher growth in Africa. So we do believe that ratify the African Continental Free Trade Agreement, and we believe this agreement can actually lead to a strengthening of regional value chains. It is important for African countries to certainly invest in these reforms, looking beyond tariffs. For now, the focus is on lowering tariffs across countries, but it is important to acknowledge that our integration within the continent will be successful if we emphasize also on non-tariff barriers that we need to dismantle. We need to make this, we need to have a strong focus on integrating people and production as well, if this integration is to yield all its full benefit. But we do see this as being a very, very positive step forward for Africa, which we support entirely, and we are working with the African Union to accompany them in implementation. Thank you.
Also in the report, digital transformation can increase economic growth by nearly 2 percentage points and reduce poverty by 1 percentage point in sub-Saharan Africa. Caesar Caldron, the lead economist and author of the report, also emphasized the role of digital transformation in promoting growth in sub-Saharan Africa. Again, let's have a look.
Of the digital economy, there has been a rapid expansion in Africa in terms of mobile connectivity. There's a surge in mobile cellular phones in the region. However, the expansion in broadband connectivity, unfortunately, has been not as stellar. About 27% of the population in Africa has access to internet, which lags dramatically when you compare with other regions. At the same time, internet is not as widely used as in other parts of the world to either make digital payments or to purchase things online. There are few governments that are investing in a systematic way in developing a digital infrastructure or a strategy to insert and embrace the digital revolution. And there are also a few businesses that are adopting digital technology. And if they are doing so, they're doing this at a very slow speed. However, there are some bright lights in the digital world. Africa is the global leader in mobile money. I think 1 in every 5 adults in Africa in 2017 had a mobile money account. Still, there's a divide in terms of income and gender. But the good thing is that mobile money has offered a platform to people to access financial services, to perform transfers, and even access to digital loans. In part, this reflects the ability of mobile operators that are embracing financial services, but at the same time, it also reflects the fact that traditional financial services are not penetrating the population at a speed that would be healthy.
In other business news, as of the 8th of April 2019, PG Industries has been delisted from the Zimbabwe Stock Exchange. PG Industries Zimbabwe voluntarily asked to be dropped from the stock market following its suspension from the bourse in 2013. Of course, this would be the statement, and according to the statement, in an announcement stated the 5th of April 2019, ZSE Chief Executive Mr. Justin Goni said PG's removal from the bourse follows the approval of the secondary scheme of arrangement by shareholders and creditors of PG on 15 September 2016 and fulfillment of all conditions precedent in December 2018, where PG Industries applied for voluntary termination of its listing on the Zimbabwe Stock Exchange. The group shares were suspended from trading on the bourse as of the 31st of December 2013. Several issues there after the company, of course, faced viability constraints resulting from working capital constraints. At the same time, the manufacturer failed to publish its financials in accordance with the stipulations of the Zimbabwe Stock Exchange. In 2016, Zimtal, PG Supplies, PG Timbers and PG Glass Zimbabwe process and distribute building materials across the country. As we progress, Willdale, which is also a listed brick manufacturer, has reacquired its preference shares. This follows the redemption of 99.74% of the ZSE listed 10% semi-annual redeemable preference shares. The brick manufacturer was able to raise $3.2 million through a rights offer which saw a 10% semi-annual redeemable cumulative preference shares being snapped up at a price of $1 each. The move followed a series of losses between 2011 and 2014, as well as a crippling debt of $6.7 million. Of course, that would be the statement that has just been presented on the Zimbabwe Stock Exchange website. Then getting into the financials, just looking at where the corporation is coming from and the effectiveness or the relevance of the rights issue that resulted in the preference shares in that regard. If you have a look, 2011 they recorded a net loss position of $1.08 million, 2013 0.74, 2014 0.93, and it's at about this point that there is actually this issue that then saw them get $3.2 million towards recapitalization of the business. The progress, of course, is quickly noted. 2015, they record a profit position of $0.21 million, moving right up to $1.1 million recorded for the full year of 2018. So it has worked as a positive for the corporation, and as at this point, it's time for a reacquisition of the cumulative preference shares in that regard, which of course have an expiry date of the 10th of June 2014. Now, as we make progress onto other news, milk figures for the month of February are out. Milk production is down 7.5% month on month. However, the raw milk production in the first 2 months rose by 14%, 12.9 million liters from 11.34 million liters recorded period of has actually played out. You realize there, January 6.7 million liters, February 6.2 million liters. Zimbabwe consumes annually 120 million liters. Current output is 70 million, which means we have a deficit of 50 million liters, which we then have to supplement through imports of $7 million in raw milk per month. Well, at our peak, we were able to produce 260 million liters with a national herd of 132,000 cows. Our current national herd just stands at 32,000, so definitely would need to ramp up our figures in terms of our national herd in a bid to actually increase what it is that we produce. Well, we're just going to take a commercial break. When you come back, we're going to have a news review with one of our investments analysts. Please stay tuned. Welcome back, viewers. I'm now joined in studio for a news review by our chief analyst here at Equity Access, Mr. Respect Gwenze. Respect, good evening and welcome to the show.
Thank you, Eben. Good evening, viewers.
Fantastic. Let's get the ball rolling. The World Bank releasing its 2019 Africa Pulse report. Key, of course, to the presentation is the fact that one of the presenters there, Mr. Albert Zufak, said that this would become pivotal in determining the growth prospects of the continent going forward, of course, the Africa Continental Free Trade Area. Bearing in mind that just last week, Gambia coming on board to become the 22nd country to actually sign off in favor of this particular agreement. What is the significance of that in terms of the development of sub-Saharan Africa going forward? Bearing in mind the fact that there has been a decline in terms of our economic growth vis-a-vis our growth in terms of the population.
Yeah, I think it's a very debatable subject. If you look right across the world, there's been overtures elsewhere to try to deconsolidate states and consolidate unions. For example, there's been a growing crisis in Europe where nationalists are trying to advocate for independent management of resources and isolation of economies in that regard, and the latest one being the Brexit one. And it's a very topical issue, although much of the contentions is around certain key aspects such as whether Northern Ireland leaves or not. But then in terms of trade, I believe that there's been that lack of appreciation. Certain number of economies, US have been withdrawing its free trade agreements with certain states, and so there's been a growth in terms of economies or countries emerging to say we don't believe in free trade areas. But if you also get back in history and look at how most of these economies have emerged, it was mainly because of globalization and of course free trade area agreements in certain aspects. So Africa definitely missed in that regard. If you look at Europe, if you look at Latin America and Asia, they all have got these free trade agreements within themselves. Although lately there has been a movement to say this is overly not worked, especially for smaller nations who are often taken as a market by bigger nations who would have advanced already in terms of production. So for Africa, it's an unexplored area, but obviously scale helps. Once you reach scale as a continent, you are able to increase production, you are able to create jobs, you are able to transfer skills and so forth. So I think it's a key area. The World Bank, the IMF, they all take the view, a Eurocentric view, because basically those are the guys who lead those institutions. And so it's not surprising that World Bank believes that unionism is the way to go, and free trade areas around certain economies might best suit Africa's quest to become the next, in fact, become the growth frontier that we're touted to be. So it's a very interesting development, but it's really a debatable subject across the world.
I realize. Now, in your response, you used a very important word, globalization.
Sure.
Now, how important is the tool of digitization in achieving economic growth across the continent? A statement there being issued by one of the key presenters, who's actually an economist, who said that digital transformation can increase economic growth by nearly 2 percentage points and reduce poverty by a percentage point in sub-Saharan Africa. How key do you think that this would be for the continent moving forward?
Yeah, digitization is quite broad. It looks at very different aspects, be it in workplaces, be it in general communication, be it in innovation and all that. But I think one key interesting aspect when it comes to Africa is that of money transfer. We have managed to move at a very quicker rate in terms of adoption of mobile money as a means of transacting, and that has enabled people to access flows easily. It has also ensured that most people become banked, and that's part of what's called financial inclusion. And so many people can access cash. So by virtue of you owning a wallet or you owning an eco cash line, it means you are now accessible for Kashagi, or if it's other players, they also have their forms of. So I mean, once somebody gets that small cash flow, they can be able to buy a few orders, if I may say, and actually start trading in their space. If you're looking at it from a different angle, there are a lot of people who are doing trade online, be it using WhatsApp platform, be it using Instagram and so forth. There's a lot of value that has been created in a digitalized world, and there is definitely that view that if Africa is to pursue digitalization on a much more increased scale, if the rate of adoption of most of these ICT facilities is increased, then there's definitely room for growth, and it reduces cost, the general cost of doing business, be it if it's a basic online application for opening a company or whatever process it is, a bank account and so forth. It reduces time, it reduces cost, and it increases the speed at which decisions are made, people interact and so forth. So definitely digitization is the way to go in all aspects of the economy, and it will significantly cost and inspire a much faster growth in terms of GDP. There's no doubt about that.
Correct. Just to add on something there, you'd find that there's actually been a move in that space. We can talk about Africa's first unicorn, which is Jumia. They are getting on to have the initial public offering on the New York Stock Exchange just shortly. And then we can also talk about other companies who are also in the same space, who are playing from about Kenya, Tanzania. We can talk about Konga. They're also coming in. And now in South Africa, Patrice Motsepe launching his own company called TimeBank, which is actually a digital platform where people can actually get to do their banking and do a whole lot of things. And now MTN is also selling off their stake right from Jumia to get into their own investments in the particular space. And now recently we are also aware that they sold their stake in Mascom to invest in what they've called an African version of WeChat, where they also expect to engage in a lot of business. You can actually do your trade on the platform. The name, of course, is still to be divulged in that regard, but I think if moves towards that direction. Remember the other day we're discussing the difference between Facebook in terms of their output against what Zimbabwe is actually producing, and how important it is for us to actually move towards that direction. Now let's move on to what is actually transpired on our very own stock exchange. Willdale, they're requesting for the termination of the listing of its preference shares. Let's talk about the significance of that particular development and how this has yielded results for the corporation in that regard.
Yeah, it has been a turbulent ride for Willdale over the past few years. Basically coming from a point where working capital was low, and they also had reduced capacity in terms of their production. So they did a capital raise in 2014, which ensured that they secured these flows through a preference shares, and likely it was anchored by a key shareholder, which is Old Mutual. But if we are to talk in terms of what this new development means, it's essentially a repayment of debt. And once you repay debt, it means you leave out more in terms of profit, because profit is simply after you have deducted all necessary expenses, including tax. So this is where we are at, where Willdale has cleared its debt, and it is now able to produce a more favorable after-tax profit position. So this is exactly a position where we are right now. So that's essentially what it means for Willdale to have cleared to have bought back its own preference shares. They no longer have to pay that 10% in interest, or in interest as it biannual basis.
So are we to expect perhaps a growth in that regard? I mean, they've just look at their performance. It seems that it has actually yielded positives for them, looking at how they're actually coming from a very red position. Now they're back in the black. What perhaps could you expect from the corporation going forward? What are the prospects?
I think it's too early for us to really gauge whether their strategy has been effective, although the top line has been growing, but the growth in 2018 was really driven by price increments. But if you look at how they performed 2016, that's a marginal profit position. And in fact, if you look at the operating profit position, I think it's not yet convincing to say they are now out of the blues. I believe that we still have to we still have to see how they perform going forward. In 2017, they alluded to facing more challenges in terms of their operations, and this is due to rainfall challenges as well as a dip in demand. So 2018, we find disruptions in the market late in 2018, and we haven't reached a point of stability where we can safely say they've emerged out of the woods. But clearing of debt essentially creates maximum value for ordinary shareholders, and that's really a welcome development. We hope that as they move forward, maybe they will get into sustainable operating performances.
Okay, then let's talk a little bit about PG Industries. They are delisting from the Zimbabwe Stock Exchange. I mean, a lot of developments that you actually can trace across the board. 2013, they are suspended from the local bourse. Then there are also issues to do with debt, which is also playing there. 21 million debts in 2015, and a whole lot of developments. 2016, you have an investor coming in from India. What's the story where PG is concerned, and what does this mean? They are actually getting to be delisted from the Zimbabwe Stock Exchange.
They now have got one major shareholder, and that major shareholder owns much of a significant shareholding, and according to ZSE statute, you can no longer continue to hold to be listed. In fact, if you go beyond a certain threshold. So I think this is a position where they've come to, and they've now really reevaluated whether it's really beneficial for them to continue on the listing. But now if you are to continue listed, then you have to trim back your shares again. So they have decided to say, let's just forego our listing on the stock market, and let's retain the present shareholding, and in fact move out of the stock market, because there might be no future value, in terms of how they envisage it. If you look at the past few years, there's been a number of counters that have exited the stock market. Radar, for example, it exited the market a few years back, and there's been a general exodus of companies from the stock market, from listing on the stock market, essentially due to lower valuations, which is one of the key drivers in terms of why companies list on the stock market. And if you are also to do an IPO today, the monies that you raise as well in RTGS form, and looking at how the dynamics around inflation have played out, you won't get full value at the present moment. So there's been a lack of investors. Companies, they are failing to see adequate reasons to support their retained listing on the bourse. And listing also comes with its own costs. You have to pay certain annual fees, and you definitely have to your earnings release have to follow certain statutes, which are guidelines by the ZSE. So all those, they put you in a restrictive corner, which I believe the company PG have put into consideration.
Fantastic. Very quickly, comment on decline in terms of our milk output as at this point, from 6.7 million liters in the first month, right, moving out to 6.2, and then of course factors to do with us having to import a lot of milk, and our national output not being satisfactory in terms of meeting the demand that we have. What are your comments where that is concerned?
Yeah, it's quite clear that our national produce is below what demand there is, and given the very cash flow challenges that we are, the forex challenges that we're facing, there's definitely need to find ways of pushing up our own production. But I think the challenge with farmers right now is the costs associated with doing this kind of farming. They far much outweigh the benefits in terms of the cost per liter, or in terms of what you earn per liter. So we need to find ways of commercializing the production of the rearing of cattle and so forth. So that's the challenge we are at. Farmers are willing to do so, but at what price point can they profitably enter into that kind of commerce?
I realize. Thank you, Respect, for the enlightening thoughts. We will take a short break. When you come back, it will be time for a look at the performance of the stock markets. Please stay tuned.
Welcome back, viewers. I'm joined by Anisu, who is our investments analyst. Good day, Anisu.
Hi, Respect. How are you doing today?
I'm doing just great. Let's get straight into the business. Let's get into the daily dose and see how the markets perform today.
All right. It seems like today was pretty much of a green day today, with both the all-share index and the industrials index twinning each other on coming up 0.59% for the all-share index to settle at 123.89 points, while the industrials index settled at 413.14. I don't know if you could give me a little bit of a perspective around about how the week performed actually in the prior week. What are your exact thoughts around that?
The stock market overall gain for the past week was just above 1%, which is about 1.0 something percent. And if you look at a 2 weeks range, which is the period over which the stock market has been going up,
yes.
the percentage gain is about 1.3% thereabout. And weeks prior to that, this was a successive decline, and the margins were averaging anything between 3 and 5 in terms of losses. So
Yes.
we saw a drastic fall in terms of the stock market on a week-on-week basis for more than 4 weeks before the 2 weeks gain, which is the prior week and the week before that. And so generally we can't say there's been a return in demand, but I think if you want to match this in relation with how the other markets, alternative market, which is the market for forex, there has been a quite shaky movement in terms of prices on the alternative market, and in fact the interbank market, where we've seen our own local dollar falling against the USD, and obviously that scares a bit in terms of investors. But I think if liquidity if liquidity has improved, because if the price is increasing, then it might mean that supply is also increasing.
Yes.
And maybe that has resulted in other shareholders, or other investors, especially foreign investors, they might have been disposing some of their shares at a loss over the prior weeks, and their money has been held out in accounts waiting to be moved outside the country, and that's why the strength in demand at the current moment might not be as firm. So generally, this is how the stock market has been over the past few weeks.
I think I'd like to concur with you there, because if we realize that our top 10 index has been pretty much the resultant of either the decline or increase of the stock market. And evidently, in the past 2 sessions where the stock market has been coming up, you'll find that Old Mutual actually has been coming up, and it's a Joe listed stock, which is primarily listed on the Johannesburg Stock Exchange. Now, with this feature, it gives foreign investors the chance to actually pull out their money via this kind of stock. So I would suppose that what you said exactly there is a reflection of how we're seeing things right here, because we do realize that there's a 2.68% increase on a day-on-day basis today, which also helped the top 10 index come up 0.91% for it to sell at 117.23 points. But then it's not only an Old Mutual factor. Cassava also added about 2.93% thereabout for it to sell at 109.53. So you'll find that 4 out of 10 counters on the top 10 index were up, 2 were in the negative, and then the rest were selling stable. But then Old Mutual evidently is now back in the green on a year-to-date basis. So if we just have a wider look at how the top 10 index has been performing on a 5-day trend, it's still in the negative, weighing down on the overall stock market thereabout. Its negativity is around about 0.64% at 117.23. Now, yes, there was an increase, but then compared to the prior, graphically we can see that the prior week, graphically we can see that there is a difference, also giving us a 0.3 decline on the all-share index and the industrials index. Now the minings index is down 0.81. This index normally follows the strength of BNC or Riozim, but then mostly on BNC's side. Now BNC had taken a huge plunge, I think about a week or 2 ago, but today has come back up, which resulted in that increase for today.
Moving to the risers and fallers, leading the pack was cassava, which gained 2.93. So this is predominantly a riser set which is dominated by heavy caps. Old Mutual again going up 2.68. Bindura there driving the mining index partially up, which is 0.66 gain to 6 cents. And Edgar's capping the top riser set. On the faller side, we've got Delta easing 0.01% to 227 cents. And we've got another giant, which is Padenga, one of the two counters, which is up on a year-to-date base, gaining. Zim Peppers has been on a roll in the past few sessions, actually in the past 2 weeks. Today it emerged among the fallers, and obviously Dawn was the biggest fall of the day, falling up 7.69% to 2.4 cents. Dawn last week its parent, which is Brainwax, released a trading statement to say our earnings are firm for the year. Of course, we have delayed releasing our results on the ZSE, but as for Dawn and African Sun, which are our anchor investments in Zimbabwe, they're quite firm in terms of their 2018 performance, high occupancy levels, high tourism numbers, and so things went out okay for Dawn and its parent.
For the forex market today, yes, as usual, it's just almost becoming a usual story for the interbank rate. It has weakened again today, settling at about 3.12, while the Old Mutual implied rate also weakened to about 4.12. Pretty much both stocks on both of the.
So can we agree in terms of this? On the interbank market, there is no adequate liquidity.
Yes.
Because if you're talking about demand stems from the amount of RTGS which is in the economy. And if we are saying that there's not been a huge money supply growth, then it also follows that only if forex is short, that can only result in further price increases. So do you believe that there's not enough liquidity in the economy or in the banks, or enough liquidity in forex wise to support a stable rate?
Yeah, I would like to think so, because I mean, evidently, ever since the signs and showings of such kind of an has been on a day-on-day basis, the rate has been weakening. I mean, there are a lot of factors that people then expected to strengthen the position of the local rate. You can talk about the 30-day moratorium. You can talk about your tobacco inflows there. But so those factors did come into play. Yes, maybe we may be talking about an early assumption or view in terms of our tobacco season, but then those numbers should be giving us a good measure there, because I mean, contract farmers at the current level have brought in about $4.4 million worth of tobacco, while your auctioneers are around about $2.6 million worth of tobacco there. So those kind of inflows should be strengthening the position of
then that's about 6 million there, which you've mentioned, and we've got 13 days of trading. If you divide that by 2, then your average is about less than 2 million a day, and we are hearing that the interbank market has been trading about 2.5 a day. So obviously tobacco, I mean, given the present levels of inflows to tobacco, it might not impact huge in terms of the interbank flows.
Yes, because I mean, you look at huge companies like Delta; those guys need about 7 million a month, if I'm not mistaken. You can talk about there are a lot of companies that do require for them to use.
But that is at a certain demand level. Do you believe that Zimbabwe still retains the high levels of individual demands, whereas you were assuming that you are a drinker, whereas you were possibly buying a crate a month? Do you still believe that you can still sustain buying a bottle of drink for $2.50, whereas you were buying it at $1 in the previous regime? I mean, the level of demand obviously is also dictated by the price point. So if Delta was demanding 7 million, where Zimbabwe reached a peak in terms of demand levels, I believe that can actually fall to even half because of affordability and also the decline in real incomes due to inflation and whatnot. So I believe there has to be a decline in our import demands, which will suppress Delta and all the other guys' demand for forex. But I think I concur, there hasn't been as much liquidity in the market as shown by this further growth in price. Maybe in keeping your thoughts in terms of where the rate could settle, I believe many people have said it can't reach 6, because if you say 1.8, which is the cash flow, which is the amount of RTGS that's transferable, and you divide it by the forex, the hard forex in the market, it will be at around 6 thereabout.
Yes.
Do you believe that the rate has the potential to breach 6, and what factors can be there to cause the rate to go below? I mean, above that rate.
If the RTGS keeps on, if the RTGS that then grows, then obviously that 6 is going to be breached.
But when you say RTGS, you mean money supply?
Money supply, yes, the money supply within the RTGS system. Sorry, if it grows, which seems to be inevitable for the government when it comes to things that are pretty pertinent for them to actually settle around and don't have actually enough money to deal with. They have had a tendency of printing a lot of money, so that tendency, putting in the fact that they could keep all things constant in their behavior, then that breach can actually that breach can actually materialize. So I would depend on the government being able to actually discipline themselves enough to maintain the money supply that is at the current level of 1.8 billion, and then we can start talking about growing the foreign currency reserves. Yes, November and December, we did notice a spike in the foreign currency reserves coming up to about 200,000, there about 300,000. But then not knowing how much more are we going to be growing coming into the near future and later future, or how much is going to be coming in on the foreign currency basis, and how is it going to affect that foreign currency rate? But then I liked your perspective on how the demand for foreign currency is going to be suppressed a lot, but mainly because of inflation issues. Now, just before we cap, a lot of economists are of the point of view that inflation may come off by the end of the year, mainly because of how demand is going to be depressed. Only because of how things are being priced right now. A lot of prices have a lot of predatory factors within them. There has been a show of a lot of people pricing their products in US dollar terms first, and then price it in the RTGS form, which probably puts a price about 5 or 6 times higher than the normal price it was before this whole de-dollarization.
Yeah, I guess that's an interesting dynamic. Why? Because when you look at the prices that are being charged, essentially we're still a dollarized economy, despite us not having the actual dollar. Because if you're setting your price and saying, when we used to be in a dollarized state, I would charge this in $1. I mean, that's back then. And you now believe that within the same price range, how much money do you need on the black market to buy that dollar? And then you price your good at 4 RTGS. Essentially, it means you're still dollarized. Now, let's get to this dynamic. You said money supply. I would also say wages. Why? Because if you adjust, if we agree that we are still in a dollarized economy, where goods and services are still priced in USD, then there's gonna be pressure within companies to increase the wages along the same rates at which they were previously. And maybe by mid to year end, would see many companies after because you still have to test your pricing.
Yes.
If you are Zoll and you have priced your data at a certain price point in USD terms, and you see that the uptake is good, then you have to adjust salaries on the other end. And when you adjust salaries, you are actually redressing the issue to do with affordability. A person can still consume at that same rate because their salaries are. And when a person spends at that same rate, it means demand for forex remains high. And it also pushes the issue to do with the exchange rate. So I think it's a whole lot of dynamics which are partially government related and also private sector related, and that's what's gonna determine the rate.
All right. Anyway, Good evening, folks. We are going to be logging out now. This is Equity Access News. Do not forget to like, follow, and subscribe on our YouTube, Twitter, and Facebook handles at Equity Access. Good evening.